This question tests understanding of the U.S. Foreign Corrupt Practices Act, FCPA, and specifically asks for the statement that is not true. Therefore, we must carefully separate accurate provisions of the law from a common misconception. Key elements of the FCPA include anti-bribery provisions, prohibit corrupt payments to foreign officials, accounting provisions, require companies to maintain accurate books, records, and internal controls. It applies to both companies and individuals involved in violations. A common exam trap is misunderstanding the bribery rule as being based on a materiality threshold, which is incorrect. It applies to individuals as well as businesses. True. The FCPA applies to both corporations and individuals, including employees, officers, and agents. B. It requires companies to maintain an adequate system of internal controls. True. This is part of the accounting provisions to prevent and detect improper payments. C. It prohibits payments above a materiality threshold to foreign officials to obtain business. Incorrect. Not true. Correct answer. The FCPA does not allow bribery below a materiality threshold. Any corrupt payment is prohibited, regardless of amount. Even small facilitation payments may be restricted depending on circumstances. There is no materiality allowance for bribery. D. It requires companies to keep books and records that accurately reflect transactions. True. Companies must maintain accurate financial records and transparent documentation. Correct answer. C. It prohibits payments above a materiality threshold to foreign officials to obtain business. This question tests understanding of the anti-bribery provisions of the U.S. Foreign Corrupt Practices Act, FCPA, and focuses on identifying what is not allowed. Key concept: the FCPA prohibits corrupt payments to foreign officials to obtain or retain business. However, it allows certain limited exceptions, such as facilitating grease payments for routine government actions, e.g., permits, processing documents, reasonable and bona fide business expenses, e.g., travel, lodging related to legitimate business purposes, modest hospitality or promotional items, e.g., snacks, branded materials at trade shows. The question requires identifying which action goes beyond these permitted allowances and therefore violates the anti-bribery rules. Giving facilitating payments to expedite routine governmental action, generally allowed under FCPA, though restricted or prohibited in some jurisdictions. It is considered an exception for minor administrative actions, so this is allowed. B. Authorizing employees to pay government officials to obtain government contract bidding, but no actual payment was made. This is the correct answer. Not allowed. Even authorizing or planning a corrupt payment is prohibited under the FCPA. The law covers both actual payments and intent/authorization, especially when aimed at influencing contract awards. C. Providing snacks, beverages, and promotional items at a trade show. This is generally allowed if it is modest, customary, and not intended to influence improper decision-making. D. Providing reasonable lodging expenses to a foreign official, allowed if expenses are reasonable, directly related to legitimate business purposes, and properly documented. Correct answer. B. Authorizing employees to pay government officials to obtain government contract bidding, but no actual payment was made. This question focuses on corporate social responsibility, CSR, reporting, and the business motivations behind voluntary disclosure. The key scenario is: a U.S. publicly traded company issues a CSR report. The report includes environmental information, specifically the use of renewable resources in products. The question asks for the option that is not a valid reason for making such a disclosure. Key concept: CSR reporting is often voluntary or strategically driven, not always legally mandated. Companies disclose sustainability information to Improve brand image and reputation. Attract environmentally conscious customers. Differentiate themselves from competitors. Support marketing and pricing strategies. However, not all CSR disclosures are legally required. A. The company was required by law to file a report with this disclosure. Correct answer: not a reason in this context. CSR reports are often voluntary or guided by frameworks, like GRI, but there is generally no specific legal requirement mandating disclosure of renewable resource usage in CSR reports for all companies. Therefore, this is not a typical business motivation for issuing such a report. To be, the company may be able to charge a premium and gain customer loyalty. This is a valid reason. Sustainability disclosures can improve brand value and allow premium pricing. C. The report can be used as a marketing tool for the company's products. Correct. CSR reports are often used to enhance corporate image and marketing. D. The report can be used to differentiate the company from its competitors. Correct. ESG and CSR disclosures help companies stand out in competitive markets. Correct answer: A. The company was required by law to file a report with this disclosure.